All right, welcome back. This is another episode of me sticking my nose into these charts every single day until I discover a trade model that makes me millions and millions of dollars. And today I'm just going to be doing the same thing that I've been doing this entire week, where I'm just reviewing observations that I made reading price action live. So at the moment, I'm not taking any trades live, not even demo trading. I'm just studying price action because I started studying ICT a little under 2 months ago. And for the first time ever this week, I started studying price action live so I can see how these candles paint and how the market reaches for liquidities and efficiencies, things like that. And I'm just understanding how the market moves. So I'm not even taking any demo trades because I'm leaving emotions completely out of the equation. And I'm just watching the candles paint, but I'm making note of hypothetical trades that I would take. So I have an idea of what my trade model looks like. And that would be a breaker formation where I have an engagement of liquidity, obviously. I have a change in the state of delivery slash order block. I have an inverse fair value gap and a fair value gap. I note that that is my bread and butter setup through back testing and watching price action live this week. That is what I like to see, but I'm also starting to realize that I like to see a stop hunt followed by an inverse fair value gap and fair value gap. So throughout this entire week, I haven't even placed a single trade, not even in demo, like I said before. But I've learned so much from just studying price action live and just watching the candles paint. So I've gained a lot of market experience this week, and I haven't had to put any money on the line to gain all this experience. So I think that learning this way and going about trading this way, the process of learning how to trade by initially just observing price action, not even taking demo trades, is absolutely genius because I'm learning how the market moves without even having to stake any money and without even having to worry about, being right or wrong or making money. So all the emotions are left out of the equation. Although I will have to note that even though I'm not taking any trades, even in a demo environment, I still feel emotions because, you know, it's human nature to not want to be wrong. So when I am wrong, even if there's no money on the line, even if I'm not even in a demo trade, I still feel a little bit of that emotional aspect of trading. I still feel that ick of being wrong. Like, ugh, you get that ick when you're wrong and you hate it. You just want to get rid of it. But, anyways, today, I could say that I hypothetically got my ass handed to. And today was the first Red Folder event that I ever went through or ever watched play out live in real time, watching the candles paint. And I could say that I hypothetically got my ass handed to. But it wasn't bad. I had two observations. I got both of them wrong. I knew what the draw on liquidity was. I know where the market was likely to head next because of simple logic that I've learned from the 2024 mentorship. But after getting it wrong twice, the third time I had an indication that price might play out to my draw. I bailed on it because I tried the shorts twice earlier, and got it wrong both times. So the third time around, I didn't trust it, and I was actually looking for a retracement to then get long because I thought it was going to be a trend day. And that is when the actual short scenario played out. So again, here's the metrics that I'm tracking. Number one, this is supposed to be in here. Whoops. Wait, what? Okay. Number one, I'm tracking the time I discovered it, the time it delivered to my objective or stopped me out, speed, how long did it take to move in my favor or stop me out, and distance, how many handles were delivered in my favor or against me. So I'm just tracking all these metrics, and already I have a baseline for what I can expect when I go into the market without even having to put any money in the line. So this process is actually genius. And then here's this, I added this new category today where if I miss an observation, I'm going to include that because I backed out of that third sell scenario. So I just added that as a missed observation. But by doing this process, I can see that I'm statistically improving without having to put any money on the line. So, in my opinion, it's absolutely genius. So far this week, I have 7 observations correct and 8 wrong. So it's not bad for my first week studying price action live. And I'm not going to go into a demo environment until I have a solid win rate just making observations from trading, from watching price action live, and that's it. Okay. So I will go over the two observations that I made. Today should not be a long video because there was only two observations, and the third one I bailed on, which I'll explain the logic behind. So starting on the daily chart, initially I came in today thinking my draw on liquidity is higher because we've been going higher, but if you think about it, look how many down close candles we have in this price run. We only have one, so this is pretty unsustainable, right? It's reasonable to assume that we get some kind of large down close candle soon. But what I brought my attention to was, number one, the consequent encroachment of this premium wick. Do we reach up into it? Do we reject it? Do we fail to get to it? Because if we fail to get to it, that is an indication of weakness if we can't even reach up to the consequent encroachment of this premium wick. So I had this level on my chart before the market even opened. So at 7 o'clock in the morning, this is when I have this level on the chart, but I disregarded it intraday. And that's another issue that I have, is I have all these important levels to reference that the algorithm is going to reference back to, but I'm not mindful of them intraday, which is something that I have to work on, just juggling all these different levels at one time. So initially on the daily chart, I came into this day thinking higher, but I saw all of this one-sided move in the London session, but look at all these lows. They're all relatively equal. So the market could just take all of these out in one swift low resistance liquidity run, which it did. And so initially that was kind of the move that I was going for because of what I saw at the top of the 7 o'clock hour. And that's when I started to try to fade this move. So initially how this day started out, it was clearly very strong and the order flow was clearly bullish. We have this little consolidation right here and we leave it with a breakaway gap. So at the moment, that tells me that price is not interested in trading down to these lows. So it's going to require something significant for me to get short up here. I'd have to see a market structure shift on the higher time frame, and as well as a cracked correlation, and that would probably then make it valid for me to look to short the market targeting these lows. And it wasn't until we got that it was valid to short the market. But in the moment, in observation 1 and 2, I was trying to fade the clearly bullish higher time frame order flow on the 15-minute chart, and I got ran over. And then I bailed on the third sell scenario that was very clear, and I spotted because I got it wrong twice before. So at the top of the 7 o'clock hours, here's why I tried it first when we ran the previous day high, and I'll drop down to a lower time frame so we can see that. But I tried it first. I tried it hypothetically short here first, and this little price leg that I got short on was simply a retracement into a 15-minute buy side imbalance to then trade higher and run this high. So there was not one single down close candle on the 15-minute chart, and I was trying to short the damn thing. So essentially I was top picking, which is something you never do. And that was a big lesson that I learned without even having to waste any money learning that lesson. So there you go. So this was simply a retracement. This price leg lower was simply a retracement into a higher time frame buy side imbalance. And then I tried it short again. Once I saw the stop run on this high right here, right, above the previous day high as well, that's when I tried it short again, because on a lower time frame, I saw a bit of a breaker formation. This is where I got my hypothetical entries. But here now I'm seeing a breaker formation, so I'm thinking, okay, I have a change in the state of delivery on the 5-minute time frame. I have a breaker formation. I could potentially get this thing short. And I have my bread and butter set up, right? I have a change in the state of delivery. I have an inverse fair value gap and a sell side imbalance inside of the breaker block. So everything is coming together right here. So at this moment, it looks clean. So what I was thinking is, at the 8:30 red folder, which is the first red folder that I ever watched live, I want to see price trade higher, tap into this inverse fair value gap, and then move lower and attack these equal lows down here. But that never quite happened. Although it did react off of this inverse fair value gap up here on a 1-minute time frame, it was a very nice reaction. It just never traded down to this low. Instead, it took out this low and came just shy of this one, primed this low, and then more continuation to the upside. But the entire time I was trying to fade the market, I never saw a change in the state of delivery on or I guess you could say I got it right here, right? But I never saw a market structure shift. There was never a market structure shift in the entire time if I draw this imbalance right here. We're respecting this 15-minute buy-side imbalance the entire time. So still respecting the bullish order flow at the moment, and it's not until we get a close, a strong close over this low with a 15-minute sell-side imbalance that never gets traded back into, so that indicates weakness. That is when it is valid to look for a sell scenario. So it wasn't until that market structure shift on a 15-minute time frame, as well as this significant stop run and the cracking correlation, you can see, just to get rid of this, you can see the cracking correlation by looking at the 15-minute chart. So another huge lesson that I learned from today is that if I want to fade the higher time frame order flow, then I need to see a cracking correlation with or at an element of time. I need to see a cracking correlation at an element of time. And the cracking correlation occurred right at the 945 red folder. So when that news embargo lifted, that is when we saw the cracking correlation. That is at an element of time. That is significant. That means a lot. And this is all occurring above the previous day high. And we can't reach into the consequent encroachment of the premium wick on the daily chart, so that indicates weakness. But I wasn't even mindful of that at the time. I didn't even see that. But yeah, if we fail to reach the consequent encroachment of this premium wick on the daily chart, that is weak. And I can go into the market looking for a sell scenario, especially when we have a cracking correlation, SMT divergence at an element of time. So everything comes together here post 9:30, but I avoided the sell scenario because I got it wrong twice, 2 times before. So I'm learning about myself. I'm learning about my own psychology without even having to risk any money, which is fucking fantastic. And I'm just journaling the shit out of everything, every little fluctuation of the market, every thought that I get, every feeling that I get, every emotion that I'm aware of, I'm journaling it. Because in this phase of my trading journey, I call it chapter 2, I'm on a mission to, number 1, master reading price action, and number 2, master knowing thyself, which is just me. And knowing how I react in certain situations, certain characteristics of the market that make me feel a certain way, I'm making note of that, and I'm journaling the shit out of that. And I know when I get put back in that situation again in the future, I know how I'm going to react. Like here, I got it wrong twice, so the third time I bailed. Okay, now I know how I'm going to react in the future. And then I completely gave up on the idea of being short until it was very clear to me in the chart that this thing was wanting lower prices. And I was like, oh shit. Sell scenario right there after I gave up on the idea. So if I go back and review the first scenario, this is what I saw. So if I mark out the previous day high, there we go. So we have a run on the previous day high, and if I go to ES, where's ES previous day high? Right here. Right there. Okay. Fuck. So this is what I was seeing at the moment around 7:30. So we're seeing the NQ run the previous day high, ES falling just short of it, and then I begin to see signs or an indication that the market was breaking down. So number 1, I saw this inversion fair value gap. Number 2, I had this sell side imbalance, right? And number 3, I had an actual physical gap in price. We closed here, we gapped down and opened here, and we notice how the bodies of the candles stay perfectly inside of this gap. I also have this wick. We respect the consequent encroachment of this wick, which you can see right here. And the consequent encroachment of this wick is perfectly aligned with the consequent encroachment of that sell side imbalance. So that's beautiful, it's perfect. So once price displaces outside of this buy side imbalance, it becomes inverse. The next candle opens, trades higher, bumps consequent encroachment of the inverse fair value gap, and begins to trade lower. And this is after I see the bodies of these candles just perfectly respect this gap and reject consequent encroachment of the sell side imbalance and reject consequent encroachment of this premium wick. So that's perfect. That's everything that I need to see. So I say, okay, I'm hypothetically short right here at this time, and I have an SMT at the previous day high. And if I look on ES was basically showing the same exact thing, just beautiful. IFEG, a physical gap. Look how it holds down price. There's perfect delivery to this inverse fair value gap, and there's also this premium wick, and it perfectly aligns with consequent encroachment of the inverse fair value gap. Same thing that happens here with the sell side imbalance. So I was seeing everything that I needed to see. So I think at this point it is valid for me to consider a sell scenario, even though I'm not seeing that typical breaker formation that I like to see. This is more than enough for me to get short. So really, if I think about it, I shouldn't even be upset that this trade came back and stopped me out, because number one, I would have taken a partial here. So I would have covered a bit on the trade. 10 handles. That's all I need, right? I'm a beginner. I'm novice at this shit. I'm just starting. So 10 handles on the NASDAQ is all I need. And a good indication that this was not going to play out was a crack in correlation relative to this low right here. You can see that NQ fails to reach it, ES taps into it, and then that's when I see this breaker formation right here. I see this large displacement, change in the state of delivery, and then this buy side imbalance is respected. This volume imbalance is disrespected. This sell side imbalance does not provide a strong reaction out of it. So if I move this over here, I'll do here and here. See how we come back into the sell side imbalance, but we just meander around, we stick around, we consolidate, we chop, and then we just trade higher. So if price is revisiting this sell side imbalance, I'd want to see speed and magnitude down out of it, but we didn't get that. And that's also after this breaker formation. We can see that we come and tap the breaker block, and we trade higher, and we also tap, or we come just shy, or did we tap it actually? Wow, that's crazy. So we tap the breaker block and the open price of this order block, and there's an SMT at the lows. So this could have been a potential long, maybe, but at the moment I was hypothetically short. So but this delivered to this high for, let's say I got short here, or long, 20 handles. So honestly, I'm not even upset about this setup, because really it gave me everything I needed to see. It just did not deliver. Why did it not deliver though? I think, I know, or this is a big lesson that I learned. My trade model has to be built around an element of time. And what was the element of time today? Well, we had a red folder at 8:30 and a red folder at 9:45. So there's no reason for me to be looking for a trade prior to that. I'd want to wait until those news embargoes are lifted and then read what does the market want to do. Which if I did that and my mental state was not impacted by any of this action up in here, trying to fade it twice and being wrong twice, then I would have seen this clean and clear. SMT at the highs, fail to reach this. Perfect. Everything I need to see. But really, I'm just trying to study how price moves at the moment. So I really don't care. I'm not trying to be right. I'm not trying to be wrong. I'm not trying to make money. I'm just trying to study how price moves. And this was good for a 10 handle run in my favor in the 7 o'clock hour when the volatility is non-existent. So I think it's pretty decent. And hypothetically, I would have taken a partial and stopped out the remainder for maybe break even. So, and I learned I gained market experience of exactly what it looks like when the trade is not going to play out in my favor, right? It's just going to chop around and hang around in a sell side imbalance and just trade right through it. So, another thing that I've discovered from the past 2 days is that the trade setups that don't play out are the ones that have a lack of engagement of liquidity on the lower time frame as well. So obviously we're engaging the previous day high, which is significant. But usually when I don't see some measure of a stop run on the lower time frame as well, like there's no stop run here, right? We just go up and down. And it's just me trading off of inefficiencies. Usually when there's a lack of a stop run, that is when I tend to get the trade idea wrong. But here's when we do have that stop run. And here's when I see the change in the state of delivery on a 5-minute time frame. And being completely honest with myself, I tried something that is unsustainable and unreasonable and something that I should never do in a live trading environment. So this is not an observation that I should have made at all. It was actually really stupid because this is not something that I would ever do in a live trade environment. And even if it did work, it's not something that I should ever repeat, because this is me speculating that the market's going to do something when we see manual intervention come into the market, which is just stupid, right? Because we don't know what they're going to do with it. They could put it anywhere they want. They've got a hand in there. But what I wanted to see was this. I didn't have this sell side imbalance on my chart. I just had this. So this is what it looked like. But we do have some measure of a stop run. So there's a run on buy side. So at the 8:30 news embargo, I wanted to see price trade higher, reject the inverse fair value gap, and then displace lower and attack these lows down here. That is what I wanted to see play out. Did it happen? No. Did it need to play out to my terminus for me to make money on the trade? No. Because hypothetically, I would run down equity on this position. Or if I'm targeting low threshold points of interest, I can target consequent encroachment of this large discount wick. And once the market forms a low and runs that low, that's an opportunity to run down equity. That's an opportunity to take a partial, which would be 27 handles on the NASDAQ, which is good, for me at least, because I'm learning. And then consequent encroachment of that discount wick is 32 handles. So low threshold partials, because we could trade down to the consequent encroachment of the discount wick, fail to get underneath that, and then trade higher, which is what we did. So if I'm thinking very low threshold because I'm a novice and I'm a beginner and I'm developing, then that's a partial. So even though I got my terminus wrong, there was still opportunity to pull equity out of the trade. But that is when I wanted to see occur, simply because we had these smooth lows resting down here. Very clean, very smooth. All the way through here, right? All the way through there. So I wanted to see 8:30 trade higher, reject this, and then boom, go and hunt these lows. So it kind of looked like that was going to play out, but we left this huge discount wick, and we were never able to breach consequent encroachment of that. And it didn't play out, which is fine. Because I learned a huge lesson to just let those news embargoes lift, let those elements of time pass, and then that is when I start looking for my trade setup. So at this point, the ego was hurt a bit. If I'm being completely honest with myself, the ego was definitely hurt. I was a little bothered by being wrong twice, and I gave up on the short scenario. And I thought, okay, this day is just going to be a trend day. We're just going to lift off. We're just going to keep trading higher, because at this point, what I saw in the 15-minute time frame was we still could not get under the 15-minute buy-side imbalance. So I'm still thinking, okay, this market is strong. It wants to trade higher. we're probably just going to see a trend day. And especially with this one-sided move from London, we have a breakaway gap here. It's probably not interested in these lows. But if I remove my expectations from the market and simply listen to what it's communicating to me, I have all the indications that suggest a reversal and suggest that those equal lows that I marked out when I first opened the charts this morning are in fact in play. Because what do we see? Number one, we fail to reach consequent encroachment at the premium wick on a daily chart. Number two, there is a cracking correlation at the highs at an element of time. So that's something I learned is very, very key today. So we have a directional SMT, a higher time frame SMT that can be seen on the 15-minute time frame. I've learned that simply when I see that cracking correlation on the 15-minute time frame, it's pretty significant, especially when it is at an element of time. It's probably going to send price the other direction. But it's not until the second news embargo lifts at 9:45 and during the 950 to 1010 macro, the first macro of the day, that is when I see my ideal bread and butter sell scenario. Everything I need to see. And it's also the first fair value gap that forms between 9:30 and 10 o'clock. So that first imbalance that forms from 9:30 to 10 o'clock, that is key. And you drag that out throughout the entire session because it's going to refer back to that. And these little dotted lines are the opening range gap. So we have consequent encroachment, 0.25 the high, and the low. And so, huge lesson today that my trade model has to be built around the element of time. Time first. Time first. There was no time element here. We still had pending time elements here, I guess I could say. And then once all those elements of time come into play, we have a 945 red folder, post 930 equities open, during the 950 to 1010 macro. It does this, and it's beautiful and it's perfect and it's everything that I need to see. So I have a change in the state of delivery. Once the open price of this is crossed over, it doesn't have to close below it, just has to cross it and violate it. I have my first imbalance post 930, the very first imbalance. I have a stop run above these highs. I have a breakaway gap. The market is so weak that it does not want to reprice to this sell side imbalance. It's that weak. Trade up and we hammer consequent encroachment of the inverse fair value gap, which is perfect, beautiful. Everything that I need to see. Not only that, but we're rejecting 0.25 of the opening range gap. So I have consequent encroachment and 0.25 of the new day opening gap that are rejected, and they come together in this one area of price. So it's perfect, perfect, perfect. So I don't know if the breaker block would be here or here. I don't know if it's the absolute last candle before the turn, or is it the lowest down close candles? I need to go study the core content. But yeah, it's exactly what I want to see. And if I get my projections on this, let's see. So this would be your first target. This new day opening gap. This is relevant. But this also aligns with the London lows, right? So that can be a first target, although that's very, very far, and that's not low threshold at all. And then we have a second target, which is the new day opening gap here. And I can take something off before lunch because I know that the lunch hour macro we tend to have a retracement on what's been in play throughout the morning. And we do have a retracement, but this thing just fucking died. Like, wow. So, if you can, what's the word? If you can appreciate where these setups form relative to the 9:30 open and the midnight open, you can think in terms of PO3. So this is actually below the 9:30 open, but above the midnight open. This is a crazy fucking reversal. So, a lot of lessons learned from today. Number one, my trade model, there has to be a time element involved. Number two, in order to fade that higher time frame order flow, I need to see something significant. I need to see an indication of weakness on the daily chart. I need to see a crack in correlation. I need to see a market structure shift and a change in the state of delivery on the 15-minute time frame. If I am going to fade that move. Number three, the market is actually capable of doing quite literally anything. I actually didn't think it had the ability to trade back to these lows. I thought it was just going to be one-sided and trade higher. I didn't think we were going to reach down to these lows. They seemed far away. But it traded well beyond that. Well beyond that. Crazy. Crazy. And I think number four is to simply not impose your will upon the chart and just listen to what is price telling you in this moment. What is it telling you? Because when I got it wrong those two times, I was looking for a long scenario. Although I saw a clear indication that this thing is kind of weak. Because we failed to reach this. I saw that SMT at the high. I saw an SMT with an element of time. I saw this forming. But in the moment when I saw this, I thought market structure shift, buy side imbalance, trade back into it, go higher. That's what I was thinking at the time. Because I guess got wrong twice back here. But it wasn't until we inversed this and I was like, oh shit. Inverse fair value gap. And we came back up. Doink. Doink. So I wasn't expecting this to happen because I got it wrong twice back here. But I saw it occur and formulate in the moment. So yeah. Crucial lessons learned today. Crucial mistakes made today, which is why I had crucial lessons learned today. So it's on days like this where I get my ass kicked and handed to. That is where I learn the most. And you got to appreciate that. You got to appreciate being wrong. Because it's days like this where you get your ass handed to. That's when you learn the most. So you got to learn to love it. And you got to learn to be... You got to learn to love to be wrong. And that's simply it. Because you will get it wrong. Inevitably. You're not going to get it right every single time. So when you get it wrong, learn from it. Makes you better. That's it. Simple. And that's it for today.